Hi friends, welcome to Konexio Technical Insight. I'm Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick pattern in Nifty, Bank Nifty, derivative data or different asset classes. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the markets are into oversold territory on the lower degree charts. Slowly and gradually, markets are getting strength at the lower levels. The bulls are trying to defend the lower levels, but as we know that due to the geopolitical tension in the Middle East, the markets has started uh, performing on highly volatile grounds, not only the Indian markets but as well as the global markets. So as of now, the trends remains to be highly volatile. Yes, markets are oversold on the lower degree charts, but at least we can say that any downfall was defended by the bulls. I'm not saying that the trend has already started, but yes, we were expecting a pre-Diwali rally from these particular levels. Market has taken some attempts to rally higher, but as I said that due to the geopolitical tension and rising bond yields, there are some sort of disruptions on intraday basis, and last couple of days has been highly challenging markets, for the across the board in the global equity markets or the global financial markets. Now, just a general disclaimer: this video is only for educational purpose. Consult your financial advisor before investing or trading. Now, friends, now let us go to the Nifty daily charts. We'll try to figure out what could be the trend for the next week. Next week is the monthly expiry, as well as it is a truncated week. So next week is also going to be highly volatile. We might see zigzag movement. It would be difficult for traders to trade at least for the next week or till the expiry. So now let us go to the Nifty daily charts and we'll try to figure out what is the trend according to the charts and the candlestick pattern. But let us go to the Nifty daily charts. Now you can see this is the Nifty daily charts. Nifty has been moving in this particular rising channel, making higher tops, higher bottoms. It has just closed uh, near its downward support trend line. It is on the edge of the trend line. You can see RSI has also given a negative crossover. That means that some sort of weakness is still there, because the global markets are also weak because of the geopolitical tension going on in the Middle East. So as of now, the trend seems to be slightly weak at these levels. This is the daily charts. Now let us go to the weekly charts so that we will have a clear view. Last week was a bullish candle, and on basis of this particular candle, uh, we have a view. We had a view that buy on dips should be the strategy, but again, as I said, that didn't make out or that didn't work out on our expected lines, and Nifty ended on a negative note on the weekly charts. But again, uh, prior to last week, last past 2 weeks, we can say that there was a doji formation. So definitely, this particular doji formation could act as a support area from these levels. So again, uh, we are expecting, because here you can see there is a cluster of support region, maybe around 19,300 to 19,250 marks. There is the cluster of support region where Nifty might take a pause if there is a follow-up selling from these levels. So definitely next week is a truncated week. Weekly candle is weak. RSI is also weak. So some sort of further weakness cannot be ruled out at these levels. But again, I'm not saying that there could be a huge sell-off, and there could be a trend reversal or a downtrend, start of a downtrend. Yes, weakness might prevail, at least for next couple of days, but we might see support coming in at the lower levels. Looking at this particular cluster of support area near 19,300, to 19,350 odd marks. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. So the first support in the Nifty is placed at 19,480. Below that, the second support in the Nifty is placed at 19,333, and third support is placed at 19,253. On the upside, the first resistance is placed at 19,681. Above that, the second resistance is placed at 19,777, and third resistance is placed at 19,850. These are the important supports and resistance level in Nifty for the next week. Next week is a truncated week. Traders should try to uh, follow these levels. Next week is a monthly expiry, so a zigzag movement, maybe this way or this way or this way, a kind of move could be seen. It would be difficult for traders to trade at least for the next week. So any traders, those who are the defensive traders, should try to avoid trading in the next week. Compulsive traders should try to trade with strict stop losses. Do not try to trade for huge moves. Just try for trade for maybe 70, 80 points in Nifty and 150 to 175 points in Bank Nifty on both the sides. You might get chances to trade on both the sides, long and short. Short. So just try to trade with strict stop losses. Now, friends, now let us go to the derivative data of Nifty calls. You will see on the screen the Nifty call data. In Nifty calls, you can see the action was seen in 19,600 calls, 19,700 calls, 19,800 and 19,900 calls. Now here you can see there has been a drop in the option premium. Implied volatility is low. It is between 7.19 to 8.57. The volume are also rising. Open interest is also rising. In some strike prices, specifically in 19,715, there is a shedding in open interest. So that means the smart money might have started booking profits. Those who were, uh, uh, I mean to say, those who have written this particular out of the money calls. So definitely on the upside, 19,750 could act as an immediate resistance on the Nifty from these levels. But looking at this particular data, we feel that still some sort of weakness might prevail for maybe 100 or 150 or 200 points from these levels, and after that we might see support coming in at the lower levels. And on immediate basis, 19,600 to 19,700 could be the area where Nifty might take a pause on the upside. If it breaks 19,600, then next pause could come around 19,750 mark. So friends, now let us check out Nifty put data. In Nifty puts, you can see on the screen that the action was seen in 19,500 puts, 19,400 puts, 19,300 and 19,200 puts. Now here you can see there is a slight rise or slightly positive option premium. That means smart money might have taken a hedge position against their portfolio. There is no huge building of long positions in Nifty puts. So at least this is giving some sort of relief that not major downside could be seen from these levels. Not writing is also not yet seen in Nifty puts, but some sort of long position could be seen looking at the open interest and volume concentration, and this I would consider it as just like an hedging position against the portfolio. Now, on immediate basis, 19,500 could act as an immediate support. Looking at the volume and open interest concentration, if it breaks, then Nifty might drift down to the levels of 19,400 and 19,300 mark. But most probably, I feel that 19,350 could act as a strong support area. So maybe still maybe 150 to 200 points downside cannot be ruled out in Nifty at this juncture, because the writing was seen in Nifty calls, and long positions or a hedging position against the portfolio is seen in Nifty puts. So most probably 150 to 200 point downside in Nifty could be seen from these levels. So on immediate basis, 19,350 could act as a support area, and from there we might see bounce back coming in at the lower levels. And next week is a monthly expiry and a truncated week. So friends, now let us check out the Bank Nifty daily charts. On Bank Nifty daily charts, you can clearly see it has broken the upward support trend line. It has given a weak close. It has closed below the trend line. But the important thing which I would like to highlight here is, the Friday's close. The Friday's close was little bit strong. Again, it didn't breach its Thursday's low. Friday was an open low kind of a candle, but that was defended throughout the day and it ended just about its low. This is the only positive thing in Bank Nifty. Looking at the daily charts, RSI is still on the weak note. You can see it has given a negative crossover on the daily charts. Now let us check out the weekly charts. On the weekly charts, you can clearly see that Bank Nifty has clearly formed a negative red candle, which is a little bit of concern at this juncture because it is a weekly candle, but at least a daily candle is giving some sort of relief. But you know that the US market has ended on a negative note, and I hope so that as if sorry gift nifty is also might be on a weaker note. Next week is a truncated week, so maybe we might open on a negative note. So if Bank Nifty breaks Thursday's low, which is 43,558, then we might see a further sell off from these levels in Bank Nifty. So again, looking at this particular weekly candle, we feel that weakness could prevail in the next week, or maybe for Monday or Tuesday, and from there, from the lower levels on Thursday or Wednesday, we might see rally coming in or support coming in at the lower levels. So most probably at this juncture, the trend is slightly weak uh, on the weekly candle. RSI is also weak, so further weakness cannot be ruled out. But in the recent past, we have seen the lower levels has been defended at the lower levels. The lower levels has been defended by the bulls, to be precise. So we need to see how Bank Nifty is performing at least on Monday or Tuesday. So now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 43,558. Below that, the second support is placed at 43,362, and third support is placed at 42,822. On the upside, the first resistance is placed at 44,058. Above that, the second resistance is placed at 44,203, and third resistance is placed at 44,589. So these are the important supports and resistance level in Bank Nifty for the next week. Traders should try to just watch out these levels, let Bank Nifty to get stabilize, because you know in Nifty and Bank Nifty, the components are the banking sector has a huge weightage. So again, if Bank Nifty goes weak, then when we might see weakness coming in into the Nifty also. So let markets to get stable at the lower levels, let it consolidate, and if it breaks that consolidation range, then one should try to go long at the lower levels. So friends, now let us check out the derivative data of Bank Nifty calls. You will see on the screen the Bank Nifty calls. The action was seen in 44,000 calls. Above that, 44,500 calls and 45,000 calls. Now here you can see the rise in the volumes, uh, rise in open interest as well as shedding in the open interest. Now this is the first time I have seen two shedding, 2 to 3 shedding in 3 particular strike prices. There has been a significant drop in option premium. Implied volatility is between 10.88 and 12.29. Now on immediate basis, 44,000 could act as an immediate resistance, or 43,800 could act as an immediate resistance. 44,000 is the psychological mark. If Bank Nifty breaks and sustains above those levels, because you can see shedding over those in this particular strike price. If it breaks, then we might see Bank Nifty rallying towards the level of 44,500 to 44,800 to 700 marks. So looking at this data, we feel that there has been a strong writing. We might see a pressure coming in the Bank Nifty on Monday, and on immediate basis, 44,000 could act as an immediate resistance. So friends, now let us check out the Bank Nifty put data. In Bank Nifty put, you will see on the screen the action was seen in 43,500 puts, then 43,000 puts, then 42,500 puts. Now here you can see there has been a drop in the option premium, but the drop is not a significant one. It is a minor drop. The implied volatility is high. It is between 12.71 and 14.25. It is already into a danger zone. And as I said, the charts are strong on daily charts. The weekly charts are weak. But as I said, there is no significant drop in the option premium. So we might see a drop in Bank Nifty. On immediate basis, 43,500 could act as an immediate support. If it breaks, then there are chances that Bank Nifty might drift down to the levels of 43,000. So definitely, the data is not showing some sort of strength at this level in Bank Nifty puts, but as I said, next week is a truncated week and monthly expiry. We might see zigzag movement. Yes, the trend could be slightly weak, at least for Monday and Tuesday, and then we might see some sort of support coming in at the lower levels purely because of the global markets is also on ended on a negative note, specifically the US markets. So, friends, now let us come to the final segment of our show, which is the positional call. I've identified one stock from the insurance sector. The name of the stock is HDFC Life Insurance. Uh, Now you can see the weekly charts of HDFC Life. You can see prior to particular closing, it has given a breakout in July. After that, we have seen a pullback. After this particular pullback, it was consolidating, and on the weekly charts, it has formed a hammer or a high wave candle. So, looking at this particular data, we feel that the price volume action are also showing some sort of strength at these levels, and the stock might see some sort of upside rally from this particular level for next 2 to 3 months. The stock has closed around 640 mark. So definitely short-term investors, swing traders, positional investors, long-term investors can accumulate HDFC life insurance in the range of 640 and on dips to 630 for an upside target of 700 in short to medium term. So definitely the stock is looking good. Again, I would like to say stock has given a breakout of the consolidation pattern in June, July. After that, we have seen a pullback and a consolidation consistently. The price volume is action is also showing strength. Indicators are also positive. So stock might rally from this level in short to medium term. So maybe this particular view is for next 2 to 3 months. So again, I would like to mention that investor can investors can accumulate the stock in the range of 640 and on dips of 630 for an upside target of 700 in short to medium term. So friends, let us conclude the show. Thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.